looking at operating the breakdown of income and operating costs and operating profit for vegetables in 21-22. Again, showing very similar trends to what we've seen in the past. So if I can bring those watching to some of the colours in the graph, the middle light blue is the expenses in a business, and you'll see here that between the top 25% and the average of the industry versus and the bottom, that the actual costs of business to actually grow the product they're growing is very similar. So while the top 25% do actually spend a little bit more than what the average of the industry spends, their uplift in income is far greater. And this is again driving what the top 25% do better, which is actually, again, when you go back and look at those growers, they're very focused on their business outcomes and what they do. So the top 25% growers here are not necessarily growing many vegetable types. They're actually focused on the things they do well. The crops they grow well, have grown for a long time, have got good markets, have good systems in place to produce that, fertiliser plans, chemical plans, and they just keep doing it better. And that's one of the really key things to look at this, is that they might not spend much more per hectare than the average of the industry, but their saleable yield times price is giving them an uplift in income. So similar trend to what we've seen before, Bryn. And obviously what you can see in the bottom 25% is that their income number is actually very similar to the average of the industry. In actual fact, a little bit higher, but they're actually spending a lot more to get it than the average of the industry. Hence the green bar, which is your operating profit left over for the bottom 25%, is well lower. So you can see that this this operating profit for the average of the industry is $43,000 a hectare lower than the top 25%. So 37% more than the average is what the operating profit is being produced by the, that's the income being produced by the top 25% growers. So that's the, I mean, this is the crux of it, Bryn. I think of any business is looking at where you fit in here, what you're spending in this light blue operating expenses, and what that's actually relaying to in income driving. So I think it's a real positive for the top 25 producers that they are producing 37% more income per hectare compared to the average of the industry. And again,
I think we'll see a bit later as well, but particularly with that bottom 25%, that those bars, particularly the expenses bar, has blown right out in this period of steep input cost rise.
Yeah, exactly right. And it may not be, I think one thing about the bottom 25% is it may not be that their actual yields are much lower than the average of the industry. It's their saleable yields that are the issue. So here, the average of the industry, and what's driven these numbers here is obviously the bottom 25% are spending more to make almost the same money as the average, whereas the top 25% are spending not much more than the average of the industry to make a lot more money, 37% more income. So if there's anything for a business to focus on, it's actually not necessarily saying, well, okay, how do we drop our costs? Because we know that we're in a cost rising situation. So it's how you actually spend that money rather than just cut, because cut may mean even less saleable yield. But I think this is the area where growers have got to focus, is that what are we spending this money on? And if that is not producing us more income or saving us somewhere else, then perhaps we need to really look at that cost, because that's what the top 25% do well. So the top vegetable growers in 2021, to just pull these out in terms of the industry and where it's set. So these are some of the KPIs that we've pulled apart. Obviously, from an expense point of view, we all know that wages is generally the highest expense for all vegetable businesses, either as a percentage of income or a percentage of cost. So what we've looked at here is 4 key areas of KPIs. So we've got on the left-hand side is wages as a percent of operating income and operating cost, operating efficiency, which is that percentage number again, how much do we spend to make a dollar, and the vegetable operating profit and return on capital. So if you look at the top 25% is the blue and the green is the average of the industry. The wages as a percentage of income obviously are less. Now that hovers around 19 to 22% for the top 25% growers for the last 6 years. The average of the industry is, I must say, Bryn, getting better at this because they are now sitting at 22% of income. Interestingly, whether you're in the top 25% or the average of the industry, the percentage of expenses, wages as the percentage of expenses, exactly the same ratio.
Yes.
So it's really interesting. So if the top 25% are spending more on expenses, operating expenses, which we saw in the previous graph, they are spending more on a per hectare basis of labour. But what that is doing is turning costs into income. And so that's where they're getting that uplift.
That's a useful spend.
It's a useful spend, yeah. It's a similar percentage of costs, but obviously because their income is higher, they're a lower percentage of income. Their operating efficiency, absolute key. And we've talked about this being, for those that follow any sort of sporting activities, that this is the midfield from a football analogy. This is the midfield of the operation. This is the getting it out of the centre, getting it to your forwards to kick goals. And the better you do this, the better you focus on your operating efficiency in the business, the more opportunities for you to be resilient, plus make good profits in the future. And you see here the average of the industry in vegetables for this past year, 21-22, is just over 75%, when we've set our target that we'd like to see vegetable growers at is below 70. So the average of the industry is spending 5 or 6 cents more per dollar of income than they should be to keep lights to cover overhead costs, whereas our top 25% producers, I think it's 63%. So that's 63 cents in a dollar versus 71 cents in a dollar. You know, it's a big difference. It's what's that? 63 to 76 is about 13%. So 13 cents in every dollar less spent to actually make that dollar of income. So key driver, and this is where businesses should focus, Bryn, still, particularly the average of the industry or those that are struggling. What am I spending my money on? What am I actually spending my money on? So that, and that obviously driven by that, well, that drives operating profit per hectare. So the $60,000 operating profit per hectare, or just under, for the top 25% of growers, compared to just on $30,000 for the average of the industry. So significant difference, and we're seeing obviously that related to return on capital, where again vegetables. So this is vegetable data. Previous slides we looked at was horticulture data overall. So again, sitting at just above 11% return on capital, cash returns. So extremely good returns with any other returns that you'd be looking at outside of agriculture, whether that be residential, commercial, whatever it is, shares. Average of the industry, again, has done pretty well in 21-22 to actually hit closer to that 8% return on capital, which again is one of our hurdles. Reason being, if you can hit 8% return on capital year in, year out, in 10 years, you double the wealth in your business.
Yes. Whereas at 11%, you're bringing that earlier, aren't you?
We certainly are. You're getting there a lot quicker and making the magnitude of increasing wealth happen so much faster. Multiple year results. This is the horticulture industry 3-year results. I think I'll flick to the next one, which is the real powerful data. I think, Bryn, is the industry, vegetable industry 6-year results now, that obviously for those growers that have been in it for this long have seen this sort of data, and this is now starting to get to the period where we're seeing some real strength in what the data means, Bryn. So for any growers out there that actually have been thinking about this or think that they should be, or maybe will it be advantage to them, this data should help them crystallise that. So we started off in 16-17 with a smaller number of growers. And obviously, as we've built to 21, 22, we've built that capacity up whereby we're looking at, close to 30% of the industry's vegetable production, domestic, not export, export excluded, is being analysed in this data set. So a very strong data set still. We look at the 6-year average data now. So we look at the operating efficiency and the profit per hectare. So in the last few years, we've seen the profit per hectare average of the industry look around from $25,000 to $30,000 in the last 3. Over the 6 years, though, that's $22,000 a hectare of operating profit. So in terms of profit per hectare, the industry's got some real challenges, because this is a challenging number to, it needs to be up in the 30s and plus for our growers to be long-term resilient. So it's something the industry should look at this number and look to where some of these issues are coming from. And one of them is operating efficiency, 75% for the long-term average, and it hasn't fluctuated much in terms of the average. Remembering that the top 25% have averaged under 67% for that 6-year period. So that is the real big difference. Return on capital has actually hit over 6 years, 8% average. So, and again, as an industry, the return on capital that they're actually achieving, and well done to the growers. This is a good result to be able to achieve that sort of return on the capital investment that they've got in their business. And the equity sits at 76% across the industry for 6 years. And we're seeing this little slight rise towards the end, and probably picked up more so in value of land, like I said before. A slight drop off here in 21, 22, which, looking at the data, was some of the effects of the losses from the bottom 25% of the industry, which was significant, affecting the return on capital, which goes to the bottom line, which then produces your equity number. So you can see in a couple of these graphs here, Bryn, like the operating efficiency has stayed fairly flat at this 75%. Question there is our target of 70% too low, and should 75% be the number? I don't believe so. I think that 70% still needs to be the target, simply because we need that 30 cents in every dollar to cover overheads in the business and provide some surplus and ability to actually invest in capital. So we're still strongly, our view is that it should be 70%. Good thing is that the operating profit per hectare is rising. If you have a look at this trend from early 16, 17, yes, the grower number in the data set is better. So the strength again in the data set is stronger. So there's probably a little bit of that happening here in the last few years, is that the earlier data set not as strong, but as you get more data, the strength in the data set does improve. And that's just showing that the operating profit per hectare numbers are there if growers have a good, efficient business.
Yeah.
The 6-year equity, so that's just the line graph showing us that the change from 66% equity all the way up to close to 80%. And then that return on capital, and you can see that green line is our 7.5% for the industry for the year. So it's just under 8%, so it's 7.5%. But you've got these fluctuating years, Bryn, where that 2020, 21, that COVID year following TPP, really affected the industry in terms of its performance return on capital. And we do see that in the operating profit average too. If you flick over to the year before, to the operating profit results, you can see that 1920 was very good. 2021, 22 was actually good. And then 2020, 21 was while it was lower than those other 2 years, certainly better than the earlier 3 years of data that we had. So congratulations to the growers that are in this data set, and to the vegetable industry for forging ahead, because this is a really strong data set now that industry, I think, has some really good messages out of this to focus on for growers. In summary, I think, Bryn, so just if we want to look at, again, some of those key, I wrote some notes about some of the key things from 21, 22. So improved balance sheets is obviously one from the vegetable industry. But as a grower, as a business, you want to make sure that that improved balance sheet is not just on the back of improved land values and what's happening beneath your feet, rather than what's happening from the feet above and actually the operating of the business. The operating expenses, again, we see between the average of the industry and the top 25% and the bottom, there's not a lot of difference on a per hectare basis. So again, the top 25% of growers are spending similar amounts per hectare, yes, slightly higher, but it's not magnitudes higher to get the extra income. So I think this is where the average of the industry, or those in the top and the bottom 25, really need to look at their costs. The higher saleable yields are certainly driving income. So I think one thing I note that looking back through the data set and the growers individually is that if they're actually in the bottom 25% from an operating profit point of view, their yields are generally not necessarily lower than the top 25%, but their saleable yields are. So what they're doing with their product, whether they are planting too much and can't sell, or the product isn't as good a quality because, whether it be fertiliser regimes or anything like that, we can't put our finger on those sorts of issues at the moment, but certainly they can get the yields, but they're just not getting the saleable yields, so turning all those costs into income. And again, I've put inverted commas business focus, and I think what that means is that we're just seeing that consistently in the top 25% are the businesses that grow certain crops, and they have done for a long time. They do it really well. They improve their systems each year to actually make that better in terms of whether that be fertiliser, crop health or nutrition, pest and disease, labour efficiency.
And
it doesn't necessarily mean mechanisation, Bryn, either. Certainly that does help. There's no doubt about it. But we've seen some results where growers have really looked at their operating efficiency and said, right, we've got to do more about this operating efficiency. And they've looked at areas in their business where they can actually improve their labour cost to the output that they're getting. So it can be done, and businesses are doing this, which is a credit to them. So they're probably some of the key points, I think, Bryn, in terms of the data and what we're seeing, some similar messages to previous years. I think from an industry point of view and from those industry representatives, it's still quite tough times for vegetable growers. They are getting good returns. So the average of the industry is still being able to maintain good returns. 22, 23 will be the real test, because we're now seeing 22, 23 the effect of high input costs and the effect of where labour costs are moving to. Like 21, 22 picked up some of those, but remembering that 21, 22 fertiliser and chemical costs, for example, were on previous year's prices. So 22, 23 will be an interesting year to see, because in the results we've already derived for growers and maybe done some cash flows forward for them, the pressure is really on in 22, 23 using their average yields and prices from previous years, because input costs have risen at such levels. So challenging across all industries. We're seeing that in broadacre as well. So it's not just horticulture or vegetables, but certainly one thing that growers again need to look at and say, well, if I am going to spend that money, I need to get that income.
There needs to be a clear line from your spend through to income.
Definitely.
Like you said, it's not so much a trying to reduce the costs, but it's being clever about the cost structure and the spend.
Yeah, that's right. Yeah. And now, look, I think some questions we get is, so okay, we use this amount of fertiliser. How do we change that? Because we know that if we've used less fertiliser in the past, we get less yield. So I think that analysis is to say, well, okay, if you do need to squeeze on the cost of inputs, then if you do that, what's the tipping point before yields do drop off and plateau? And to be honest, Bryn, some growers don't know because they've never done the trials to find out. And so that this is an opportune time to do some of that. I'm not saying you trial it over your whole business, but certainly it's a year to actually have a look at some of that own work on your own farm to see where that tipping point is, because in a lot of vegetable businesses, you've been putting fertiliser on for a long time. There's a strong soil base. How do we get better value out of that? What is my soil type? How do we actually respond? So I think there's certainly areas where growers can still look at, rather than saying, oh, well, we're just going to be lumped with higher fertiliser costs, so now the fertiliser dollar amount in our budget is higher. That's not an acceptable response to say we'll just accept that and go along as normal.
And I suppose the other thing we hear, particularly from people who've not participated in the project is, you know, how can I go and ask for an increase in price? Well, what we've found is that those that have participated in the project, through the information and the work you've done over years and years, you've got a really clear idea of what the cost base is. So then, you know, it's easier to go and negotiate and go to back when you've got figures to bat up.
Yeah.
This is my I can't go below line. Otherwise, I'm eroding equity.
Definitely right. And that's one thing we've done with those current growers is do that cost analysis for them, actually show them that if this is the increase in costs of those key areas of the business, labour, chemicals, fertiliser, fuel are four that we've used, but we can use any number. We analyse what those increases mean for the operating efficiency and the potential operating profit of the business using historical yields and historical prices. And so that's given them a lot of strength to actually go back to their suppliers or the markets they're supplying to say, this is the situation my business is in. I want to keep continuing to produce quality product for you, because that's what all our growers do. They produce good quality product for the end consumer. If it's costing them more just because of where world markets have taken us and world squeeze on prices have taken us, there needs to be that two-way discussion. And that analysis has put our growers in this project in a really good position to have that discussion. I'm not saying they're going to negotiate higher, but it's certainly got the data and the information to be able to do so. Yeah.
Super stuff. Are there any other closing points you want to add, or do you think we've covered it?
I think we've covered most. There is a new spin we've put on it, looking at some of the cost per hectare. So if you want me to briefly take the viewers through that. Yep. So this is our this report here is the vegetable businesses of 21-22 split into top 25% average and bottom 25% based on the split now of income and expenses. Okay, so this is again de-identified data, so no one knows who's who in this data set. No one knows who's producing what product. This is just the industry data that you can actually see, and there's some really strong trends here. So what you're seeing as the average across the industries at the bottom, if we go down, you see this operating efficiency where the top 25% are sub 60 in 21-22, the average of the industry at 72, and the operating efficiency of the bottom 25% at 89. So have a look at this operating profit number, $67,000 versus 30, and then $8,000.
Yeah, it's pretty monster, isn't it?
These are per hectare. So this is per productive hectare, Bryn, not the total hectares that are owned. This is across the hectares of production. So obviously that operating profit number is driven by, you can see the total vegetable income, you know, where the top 25% average. So that group in the top 25% average $155,000 a hectare. The average of the industry sits at 105 and the bottom at 73. A couple of key things. Let's look at the wages. So here's where I was saying to you before that when you look at the wages cost per hectare, they're actually
very similar, aren't they?
They're not a lot different. They're not a lot different. So this number, $28,000 as a percentage of 88, is similar to 27 over 75, but $28,000 a percentage of 155 is 19% of income, which we were looking at before. This one here, 27,000, a percentage of 105 is 22. So not a lot of difference in terms of percentages, 3%, but the relativities is that the dollars per hectare aren't that much difference. Like in terms of that magnitude, even the difference between the top at $28,500 a hectare versus nearly 27, you're talking about $1,500 a hectare difference between the spend of the bottom 25% ranked on profit versus the top. So a really interesting number there. I think what's interesting here is that while these numbers aren't big per hectare, administration includes things like accounting, consulting fees, agronomy fees,
getting that expert help.
Yeah, legal fees, the outside eyes on the business, so on dollars per hectare. So we do there, you know, we're actually the top 25% of spending double per hectare. So remember, these are actual per hectare numbers now, not percentages. And the bottom parts of the industry are not spending as much. So is there something in that? Maybe, but I think certainly these top 25% growers don't mind getting some outside eyes in their business, and generally what we've seen, Bryn, to be honest, is that is the accounting industry that strongly focuses there. So there's a strong focus of on accounting in the industry, and some of our growers get regular reports from their accountants, which is a good thing. But that's also something that a financial, a farm management consultant like what we do can do as well. So interesting point. Any other things that actually differences in fertiliser for fruit and veg? We are just starting to see now a split between the average of the industry and the bottom 25%.
Yeah.
So I think that number is significant. You're talking about 4,000 a hectare versus 6.5. So it's over 50% higher spend on fertiliser for the veg produced by the average of the industry and the top. So interesting numbers in themselves. Are the bottom 25% spending enough for fertiliser? Again, it's something probably to just flag, I think, Bryn, is that this is now starting to spread, that difference between those two.
Yeah.
Fuel and oil, to be honest with you, I can't actually explain this one, Bryn.
No.
But unless we go back through some of the individual growers and look at what they may be specifically doing, I think one of the things that does come to mind is that this might be more mechanisation around those growers, but I know some of the growers in the top 25% aren't highly mechanised with machinery. So in terms of machinery, talking about tractors and utes and all those sorts of things. So something for us to go back through and look at. I think, though, what it may well be is that there is some impact here of freight, Bryn, and that might be owning your own freight or contracting freight versus having your own vehicles that contribute to that. So I think there is some of that in there, but not necessarily all weighted to that end.
I think the key thing with this table, though, is if you've not participated in the project, just take some of your spend and divide it by that hectare, and you'll soon see where you are.
Yeah, exactly. Yep. Yeah, you can actually use some of this data already from the project to analyse your data. Yeah, as long as, and one good thing about these numbers that we know is that they've had the eyes of a consultant go over that. So one of our team has gone over each individual business's figures and made sure that the right numbers are coded to the right area. So that is, and not all cash books are totally exactly right. That's our job, to make sure that they are actually in the right position. So look, a really good data set, I think, brings some really good numbers to come out of it. And like you've said, if you want to really see where you're at the moment, you can use this chart as a guide. If you want more in-depth analysis, you can certainly become part of the project.
On the project.
Yeah.
Indeed. All right. Well, I think there's a lot in there for people to take away from. So thank you very much for your time, Paul.
Thanks, Bryn. And again, thanks to the growers who've been participating, and in anticipation of more to come in the next couple of years of the project, we look forward to continuing analysis on what's a really interesting industry and a good industry to be a part of.
Indeed. Thank you very much.
Brilliant. Thanks. See you all.